welcome to the Closing Beat, everybody. Happy Turnaround Tuesday. How you doing out there? Hope you're having a good day. Hey, we're financial advisors here at Jazz Wealth. You know the spiel. We do this every day here to teach you guys about the markets, go over everything as they happen, because we're actually financial advisors that know a thing or two about investments. It kills me. I talked to an advisor today that wanted to merge with Jazz because he didn't know anything about investing, and his clients were starting to ask questions. And I was not very nice to that person. So if you're watching, you deserve it, right? You got to know something. Come on. How many advisors are out there just playing golf and just doing a little planning and stuff? That's not us. We manage our own portfolios on the website. You can actually see what they are. We're hoping to expand on that here soon. And we like to teach, right? And this is one of the ways that I like to share that with you, so that those of you that can't be customers or just don't like me at all can actually learn something and stay in tune with the market. So we'll go over that here today and talk about it. Off to the right-hand side of your screen, you can actually see the market performance throughout the day today. We had Mr. Powell, Fed president, talking today. He was testifying in front of Congress saying that Congress needs to offer more relief, and Congress mostly agreed, but they don't agree, and so nothing happened, but that's what happened for the day. We also had existing home sales. They came in as expected, which was higher than expected, or not expected. It was higher, but came in as expected, and so that was good for some of the home builders. We'll cover some of that as we go. We'll go over to the markets here. Let's take a look and see what's going on. You've got the, let's start with the NASDAQ. Here we go. So you got the NASDAQ here. All the major indices had about a 0.5% gain until literally the very moment the Asian stock market opened up. That was our high in the U.S. markets. We went back to negative for the day, and we spent the rest of the actual day recovering here today. It was a sell-off that happened perfectly. China was down 1.2% overnight, and so that kind of put a little pressure on us throughout the evening. But as we came in today, you can obviously see the market started to recover and turn around a little bit. Here's the NASDAQ on the screen, up 28% year to date now. Here's something interesting. I like to share different things with you. Let's pull this one up here. Here is, believe it or not, every single day the amount of money flowing into and out of the NASDAQ ETF, the QQQ. And so what we did is we just plotted every single day here, because last Friday, which is this little dot right here, was the second largest in terms of dollars that came out there. $3.4 billion came out of the QQQ. That's the largest single percentage day decline ever. And so we have this extension to the downside today. Maybe we're starting to see a little bit of mean reversion there over the last month, this month, so September. So far, we're down $22 billion in the NASDAQ, meaning money's coming out of those big tech stocks, out of the NASDAQ, and is moving elsewhere, if ever so slowly, but in big chunks. So you've got that flow of dough coming out of the NASDAQ, even though today was a good day. So if we look at the NASDAQ here, we're attempting to get back above the 50-day moving average there. Amazon was your biggest contributor today, had an upgrade overall, and apparently they've got their own new Peloton-type bike that's a whole lot cheaper than Peloton. And of course, like Amazon does, they make their own stuff and they sell it cheaper. Well, Amazon got a 5.5% gain on the day, so that was your biggest contributor in the NASDAQ. Other than that, it was some of the names that you're probably familiar with. I don't know. Let's just try a couple of them here. You got Microsoft back up to the 50-day moving average. Apple, Facebook, the gang. You got Alphabet all helping out as well. You had a little weakness over in Tesla here today. Elon Musk tweeted out yesterday that he was trying to calm people down. He likes the stock to be a little bit lower. Of course, we've shared that with you. But stock down 5% throughout the day today, just because that battery day, the annual meeting's coming up here, and he didn't want people getting too excited, so there was a series of emails and tweets that went out to try to calm people down a little bit, and it looked like it worked, at least for now. So Tesla was a little bit weak. You also had biotechs a little bit weak on the day. Illumina, very extended sell-off here overall, and a little bit more today. And Gilead Sciences hinting at those new lows, down 1.25% on the day, but not bad. Right? I wouldn't say it's too bad. You could look at the biotech sector as a whole. They managed to gain a little bit on the day. The IBB is an ETF you can use to look at biotechs on their own if you don't want to look at the NASDAQ and dig through all those stocks. And so that was up a little bit. Just had a few names in the NASDAQ that were a little bit weak. We go over to the S&P 500. Here you go, up 2.5% year to date. I shared this with you yesterday, right? Let's go back over to it real quick. Yesterday we talked about this. When the stock market, S&P in particular, falls 1.5% on a Monday, what's Tuesday look like? Gave you the stats there. Basically 70% of the time, Tuesday is a positive day, just a small day. Today we had a positive day, of course, so the stats hold themselves up, and it was a little bit better than average if you happen to be looking at that. And so it's good. A little bit of mean reversion here today, looking good. If we look at, how do we want to do this here? Let's see. We'll look through some of the stocks first. Okay, so if you look at some of the stocks here, you got Twitter. Twitter was a little bit higher today, almost back to 52-week highs there. Some of the REITs stood out, I thought were kind of interesting here. Apartment Invest Group, they were a little bit higher. did the best today. Also got a 5% yield overall. PLD, this is the most, one of the strongest ones. We're going to use relative strength as our sort of code word or drinking word of the day. PLD was one of the relative strength stocks that was up about 3% overall on the day. Now, let's go over to this here. What about the month of September? We spent a lot of time talking about how the second half is weak and all of that's playing out perfectly at the moment. But let's go back over to this here. We've shared this with you in the past. In an election year, what is the positivity rate by month for the S&P 500? So here you go. You may recognize this if you're an avid viewer, and I thank you for watching, by the way. In election years, here is how positive each month is. We've already passed most of them there. You come down to August, it's one of the more positive months. But then September is basically a coin flip. 52.2% of the time, you can see September is weak or is positive in an election year. You also know that Septembers tend to be weak overall. Showed all that data with you there, and of course the customers as well. And so September, it's still a coin flip. Get that in your head there. If you're looking at some of these stocks, you're thinking, oh my God, they're going to bounce back or whatever. This is not the month they're supposed to do that. And so the S&P positivity rate, really, I mean, it's right there. I mean, there's a chance, I guess, but that's where you stand right now. And now you know the data inside of an election year because, well, we got elections coming up there. You see October 60% of the time, and November tends to be almost a coin flip there, 56% of the time, and it's not a catastrophe. So look at November there. You notice how November is not a catastrophe in an election year. A lot of people think there's going to be chaos and power is going to go out and all that. All right, you know, that's probably a little TV watching there, but November is not a chaos type month overall. We'll move on here. Let's go over to the Dow real quick and then we'll take you on from there. The Dow recovering just a little bit. It is still down about 4% year to date overall. Healthcare and bank stocks were your weak spots today. If we look at United Healthcare, another down day. I like this pullback, by the way, looking good there, just working on it. Johnson & Johnson, a little bit of a slower moving stock, but pulling back under the 200-day moving average. And then you had Goldman Sachs, just more weakness there, 1.2%, and JP Morgan, you know, they got some issues there, right? And if that continues to be a headline, that's going to be an issue. So JP Morgan down 1% on the day. Before we go over to the sector breakdown, take a look at the bottom right-hand corner of your screen. You can see the classes that we have on our FinTips series, which is on our YouTube channel. You can actually go to youtube.com/jazzwealth, and you can see our short FinTips series, a couple topics there for you. This week on our Wine and Wealth, which is a class that we do for customers each week, we're going to focus on nest egg again, maybe try some different things there for those of you that like doing the planning. And in our research site, Cody's got a recent post there. Can I show you? Can I just show you real quick? Do you mind? Does it bug you? Let's take a look. Here is our research site here. I posted something. I'm going to share a little bit of it with you here today. I want to get you guys thinking a little bit differently around building up watch lists. How do you determine relative strength and things like that? And Cody's working on publishing his post here about the difference and the possibilities between DraftKings and Penn National. So he'll be posting that, and hey, check it out. You go to the research site. It's $13 if you want to join us there, where the goal is to show you research, teach you, give you a little education there so that you can hopefully be a better investor, a more informed investor and everything. All right, let's go over to the sector breakdown here today and take a look at what's going on. On the right-hand corner or right-hand side of your screen, you see the color-coded sectors as they stand. I will go over here real quick. Let's look at the healthcare stocks. More weakness there. Not so bad, but still saw a little weakness there. You got Supreme Court nominee fight coming up. That's going to be something there. We already talked about United Healthcare being weak. Edward Life Sciences, cool little pullback right there. I thought that looked good. It's also at the 10% mark off of high. So you got your 10% pullback right around price support, right around the 50-day moving average. Maybe something interesting. Banks continuing their breakdown there. I'll tell you what, Wells Fargo touched the 50% down year-to-date area today by hitting back at these lows, just ever so slightly breaking that low there, down 50% year-to-date. Do you like a discount? Citigroup down 1.5%. It's been one of the weaker ones over there. It's also the next closest in terms of year-to-date weakness, down 44%. If you like the discount there. Relative strength, said that's going to be our word here today. Relative strength you find in the cards, I don't know how you want to say it, card companies, Capital One, you know what I'm talking about. Discover Financial. Also showing some relative strength there recently, not today, of course, just overall relative strengths. And then you've got some of the regional banks right in there. Synchrony Financial, nice relative strength, stronger than the market, stronger than the sector. And we call it FitBoy. Fifth Third Bank is how we how investors talk about the stock. It's FITB. You say FitBoy if you want to sound cool and know what you're doing. So you got 3% decline there. Overall, got good relative strength on that one. Just a little pullback in an otherwise strong stock. All of these up over 2% last month, while the sector was up was down down 3%, so something to consider there. It's not a sector, but look at retail. Retail off the 50-day moving average today, basically because of two stocks. You got GameStop hitting new highs, up 20% today. Very impressive there. You got Carvana also hitting new highs. They are killing it. They expect record third quarter profits overall. They got a number of upgrades today. However, I want to point out, not all the price targets were higher than the current price. Careful when you see on TV or you see somebody say price targets were raised. Okay, well, they may have been raised, but remember, it's a 12-month price target. So you had some price targets still in the 180s, right in there, around 200. Take a look at the stock here. It's not around 180, 200, right? It's above that. You had some at 250. What was it? Wells Fargo went to 250 in their price target. All right, so that one's higher. But other than that, you got price targets that are lower. In other words, they're saying they believe the stock will do well, but they believe it's already done well and likely to stay in this area here. So keep track of that one if you want. Both of those stocks account for over half the gains in the retail sector here, or retail industry today. If you look at the XRT, that's just kind of a fun one to use. Going over to home builders, you see that relative strength, right? Relative strength being something that's holding up while something else has shown weakness. You're comparable. If you go in the research site right now, if you're one of our members, I went through a whole description there and a really, really cool sort of geek out. How did we find these stocks and what does it all mean? How do you find the stocks? Anyways, in the home builders, you got a couple cool things here. We haven't looked at this in a while, but Lennar hinting at a new breakout. Last time we talked about it was at this breakout. Now you got another one setting up here. Good expectations for new home sales coming up. You got a lot of good things happening there in terms of potential technical breakouts, good fundamentals and everything. You've got there you go. I can't type today. All right, you got LGI Homes, nice relative strength there, looking good. We happen to own that one, so kind of excited to see that move higher. Toll Brothers, we also own this one as well, up 2.5% on the day. All of these stocks, regardless of which ones you own or you're playing along in, Pulte Homes, things like that, they all did well. It was just a good day overall for these stocks in general, right? Just because of that home sales numbers there, existing home sales. And also the home market is just on fire. I don't know if you noticed that, but that's also bodes well for these guys if you happen to be paying attention. Taking a look at the price of gold. Here we go. Gold down just a little bit more today. Breaking down out of that. It's continuing a sell-off from yesterday's breakdown. Fun one here. Look at silver. Silver's pullback here broke through the 50-day moving average. First time in over 3 months. Got a fun fact for you if you're interested. The SLV, which is what I use to look at silver, it's just an easy way. You could use the futures if you like, but the SLV started trading in 2006. That's not the fun fact. The most recent move here, if we go over to this guy here, the most recent move was 94 days above the 50-day moving average. That's the second longest ever. In 2011 was the last time it happened at 100 days. Well, that's kind of cool. What's more interesting is in 94 days this time, the SLV accomplished more than it did in the 100 days in 2011. You got gains of 79% now versus only 59% before. What does all that mean? It means that SLV is likely still very extended where it's at, and there's probably no hurry to be diving in at these prices if you were to compare that with a bunch of other stuff. But I just wanted to share that with you there for something interesting and something extra. New highs and new lows for the day. Well, this is a rather boring list, if I may. Progressive, right? It's on our list here for relative strength stocks as well. Cover that in a second, but that hit new 52-week highs, and that's it. There's no other new 52-week highs. So what I did is I put together a quick list of stocks that are close to new 52-week highs. All of these are within 1.5% of hitting new highs. So if you like these sort of plays, this is the list you'll be looking at here. Lennar, well, obviously it had a good day today. That is the closest. Dollar General, second closest here from hitting new highs in the S&P 500. Charter Communications, also very close to hitting new highs. And Target. Everybody loves them some Target, pay a good dividend, respectable, consistent dividend, by the way. 3% higher, almost a new 52-week highs, looking good. There were no new 52-week lows. That's good news. You got Gilead Sciences there, Walgreens getting close or in the area. You've got Wells Fargo. You're going to have, what was the other one there? Molson Coors, all very close, but not really a whole lot that are very close to hitting new 52-week lows. And that is it. So we'll move on over to our watch list, if I can do it. Let's go over here and take a look. Little bit geeky. Remember, Mondays we always start easy with you, and then we just push a little bit harder, get a little bit geeky, so I hope you're ready for this. We're talking about relative strength, and we're trying to define it. What is relative strength? Like I said earlier, it is the comparison between what something is doing now that happens to be in the opposite direction of whatever you're comparing it to. It can also be that something is not falling as much as your comparable, or that it is stronger than your comparable. In other words, if you find a stock is up 5%, the S&P is up 4%, I don't know why I picked those numbers, then you would say that is relatively strong compared to the S&P. If you find that a banking stock is down more than the banking sector, you would say that that stock is relatively weak compared to the sector. So what we're looking for today is relative strength stocks. You have to define that though, and it's kind of a broad term, right? There's no real universal term for that, like the 200-day moving average and things like that. So what we're looking for are stocks that have pulled back less than the market, the less the better, meaning the markets have fallen 10%. Anything above that, just give me something better, but we want the top the top 10th percentile of all, the top percent of all of the good performers out there. And one interesting thing, we don't want it to just have one day where it performed better than the market or something like that. We wanted, over the last 30 days, we wanted at least 50% of all days to be what we call relative strength days, meaning there were days that it either outperformed or days that it didn't fall as much, days that it gained more than the market. So we're not just picking on stocks because we see, well, that one fell this much and the market fell this much. Got to define it. So what we're looking for is stocks that did that. And here, I'll just give you just a little bit here. So, for example, here's Amcor. So we could look at this, I'll get rid of this guy here. We could look at this and say, well, we know the markets have fallen, but Amcor has not. Very cool company, by the way, if you're into this sort of thing. Anyways, it's basing sideways, so looking good there. And our criteria is that at least 50% of all days in the last 30 days have to be what's called relative strength days. So what would that look like? Let's try to define what that looks like, and I'll spare you that one. We'll go over here to this one. Here is, I did the first two of them actually for you. So you got Amcor and CHRW. So in Amcor, this is what I'm trying to highlight. The S&P down 1.15%. Amcor lost less. It's green. That counts. Down. The S&P down. Amcor positive. S&P down. The stock not down as much. If the S&P is positive, then you want Amcor to be more positive. If the S&P is positive and it is not more positive than the S&P, it doesn't count. So basically anything that's in black here doesn't count as a relative strength day. Anything that's in green does count as a relative strength day. Add them all up, you get greater than 50%, which in this case 62.5%, and that would count as a stock for our scan. I basically made this pretty little chart so you could see the idea of what we're looking for. CHRW is the same thing. If you look through the last 30 days here, all we're asking is that it shows a pattern of relative strength, not just one day over the last couple days that it happened to be strong. We want to see a pattern. We want to see juice in the stock there. And so that's what we're using for our relative strength scan to show you. So anyways, on the list there, you've got Amcor, very strong, looking good there. Archer Daniel Midland, very strong. It's in a tough sector now, but doing very well. It's obviously relative strength stock compared to its sector and compared to the market, and 50% of its days are good. Here's CHRW. Take a look at that. Almost back to 52-week highs, looking good there. You got some more stable stocks that have been waking up here as well. John Deere, or Deere now as they call it, almost back to 52-week highs. Old Domino's Pizza. Right? The whole virus, this is a virus-related stock, obviously. It did well through the virus. Very expensive stock, but almost back to new 52-week highs. Lennar, we just mentioned. Now you can see that's a relative strength stock. You would be able to look back at that data and say more than 50% of the days have been what we call relative strength days. Looking good there. And then lastly, I believe it hit new highs today. We already had this on our list, was Progressive. Just been really strong. So that's just a small list of stocks that are actually doing that at the moment, and a very quick way to say, I'm only interested in the strongest of the strongest, but how do we define the strongest, right? So I'm trying to give you some guidelines there so you can now say, well, I don't have Dustin to do this for me every day, but now I know what he's looking for, and I know how to go out there and find it the next time the markets pull back, and I want to buy the strongest of the strongest stocks. I hope that helps. All right, lastly, I'll do the stocks in the news. I pressed the wrong button. There we go. Stocks in the news there, and then we will move on. Here we go. So you got a couple things, and I'm just going to pull this little guy up here, kind of cheat today. You got AutoZone, also a relatively strong stock. Today was a bit of a wild day, but they beat on earnings by $8.21. Revenues came in better than expected, looking good there. GameStop, we already mentioned that one. GameStop, they've got a sort of an activist investor, not a well-known one, but they've got an activist investor that basically just they took a big position in GameStop, then they went to GameStop, knocked on the door and said, we're going to have a say in what you guys do from now on. So we want to be able to make some decisions about how you run your company. GameStop's like, oh crap, I guess we have to, pay attention. And they're like, yeah, we do, because we own a big chunk of your company. That's why the stock was higher, because the belief is that people that are running GameStop aren't doing very good and have not done very good to offset the decline in sort of the physical gaming space. But gaming is a real popular area, so GameStop's got to find a way to compete. These new guys think they can do that. Investors seem to agree. All right, moving on to Tesla. You got the battery thing coming out. Stock was down just a little bit here today. The tweet about Battery Day and him saying, we're going to focus on 2022. We're not going to focus on something or some magical announcement today. We're going to, maybe he'll surprise you, but we're going to focus on things in the future and sort of what's going on there. Put a little bit of a lid on the price of the stock, but I would say that's all that it was. They put a lid on the stock. Didn't crush the stock. I mean, it just kind of put a lid on the rally. Not a big deal. So there you go. Amazon gets a couple upgrades here today. Bernstein goes to 3,400 on their price target, which is higher than where it's at. They also launched the bike, the Peloton. I don't know what they call it. Echelon or something. I don't know. It's like $500 when the Peloton bike, was it like $2,000? I mean, those Peloton bikes aren't expensive, aren't cheap. And also you'll be able to link it up, the Amazon bike, with all the other stuff. It was pretty cool what they came out with. And that's obviously not good for Peloton. The stock, I believe, was up most of the day. It did finish a little bit lower, so it wasn't too big of a deal. But that's what you have there. All right, lastly here, we've got earnings tomorrow from General Mills and JK Solar coming out. And Philip Morris paying $1.20 in dividends. If you're interested in that, I will try to take your questions, see what I can do, and go from there. Yeah, let's see what we can do. Marie says, your thoughts on OIH, stay away or nibble. Oil's a tough one. Now, these are the oil service stocks. This is not oil, right, in its pure form. There's really no good way anymore to trade oil in its pure form without going with leveraged ETFs, and I don't like leveraged ETFs. Anyways, oil service stocks right now, to me, is a nibble, right, and a light nibble. If you had to do something, I can't tell you what to do, but if you had to do something, someone's forcing you, you've got very consistent sort of pressure to the downside. So there's no reason to believe that today is the day that it finds a bottom, starts to rally, and somehow it's a magical entry. Patience, I would say, a little patience there. Yep, I love it. Yeah, Citrix outperforming today. Yeah, a lot of good areas there. They're not the most exciting stocks that people focus on all the time, but I like that you're looking elsewhere there, some of these good things. I like it. I like it. GameStop needs a new business model yesterday. Yeah, it's got to have something to do with the e-gaming, right? It's got something to do with it. I don't know how they do that or what they're going to do. I'm glad I don't have to make that decision. But yeah, you're right. They need to make a decision, and they need to make a change, like a 180. Pretty much now would be good. Yeah. Oh, yeah. Nike earnings came out. Yeah, stock performing well. Let's see where it's at now. Nike after hours should be up a little bit. We're trading 127, so getting better by the minute, actually. That's going to be new highs overall. Their their online orders, digital orders, up 82% year over year. That's the focus. That's where everybody's at. Digital sale, obviously because of the virus, but overall, Nike's been trying to move more to digital sales. They have done this about as well as Adobe did, I mean, in their own space, but very nice. Up to 127 after hours. Yep. I like it. You think the most recent correction is over? It's hard to say that it's over. There's people that get excited around the 10 and 20% drop areas. You're starting to see that in a lot of stocks. Pointed out some yesterday as well. 10% acts as its own sort of unique price support. It's kind of like the $100 mark or the $200 mark. Why? Why does that act as some kind of resistance? Psychological in a way. I think people look at it that way. Yep. Your wife showed you a line out the door at GameStop today? I don't know if they were buying. That's interesting. But I mean, I wish them well, right? But we'll see what happens. I love it. Any real chance for financials to break out of the doldrums they've been in? I don't think anytime soon. So right now the momentum is to the downside. The narrative in the media is to the downside. That's a big ship to turn to get that to bottom out there. Yep. Misplaced hope, but hope nonetheless. Hope is the one four-letter word that's not allowed in the stock market. When it comes to investing and trading and stuff, hope is like the last word that a trader says before he goes bankrupt. I love it. Dustin, is it time to be bullish on Tesla? I think it depends on who you ask, right? Everybody wants to buy Tesla cheaper. I like to buy stocks cheaper. It doesn't matter what the name is. So just my natural instinct says I can't chase it at these levels. Obviously, they're doing well, and the momentum's good for them. Everybody's excited. I love seeing how, like, what was it, Ford has like an F-150 or a Bronco or something that's going to be all electric, and they try to promote it like it's all cool and stuff. People don't buy Teslas because they're like super excited about saving the world as their primary concern, right? It's the brand. It's truly the brand. It's the support of the brand, the uniqueness of the product, of course. But I like how these other car companies think that they'll just go electric and they'll sell cars too. I don't think it's going to be that easy for those guys. They don't have that rock star type mentality when it comes to a brand. It's like Apple. They've done a great job of that. Yep. I like it. I like it. Perfect. Well, I will wrap it up there, let you guys get back to enjoying your day. I do appreciate you guys hanging out with me here today. Double check here to make sure I've covered everything, and I did. I did. Hope you enjoyed watch lists and everything that we did today. It's a lot of work to put the show together, but we enjoyed doing it for you. And so when you hit the subscribe button and do all that good stuff, we thank you, right? There's some little kid sitting in the warehouse here that smiles when you hit the subscribe button. So I appreciate you doing that. Have a great rest of your day, and we will talk to you tomorrow.